Hello, welcome to the European Open briefing for Tuesday, September 26th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So geopolitical tensions flare up again after North Korea accuses the United States of declaring war on the country. So we have quite a bit of risk off again this morning. The dollar is down against the yen, though it is broadly firmer against other major pairs. The euro is struggling near 1 month lows following the German elections on Sunday, which failed to give Angela Merkel a clear majority in parliament. And oil prices continue to rally following from Friday's OPEC meeting, where major producers expressed their optimism on the rebalancing of the oil market. Plus, we have tensions with between Turkey and the Iraqi Kurdistan region following an independence referendum there. So let's first start with what's happening with North Korea and looking at gold. We can see gold shot higher, rising back above the 1,300 level after North Korea's foreign minister said that Trump's tweet over the weekend that him and Kim Jong-un won't be around much longer amounted to a declaration of war, and he said that North Korea will shoot down any US bombers even when they are not inside the airspace border of the country. We should note here that US bombers have been flying off the North Korean coast in the past few days in a show of force. And this morning, South Korean media are reporting that there is a buildup of defenses along the the east coast in North Korea. But the White House is trying to tone down the tensions or the words between the two countries. The White House press secretary said that denied that the US has declared war, but financial markets are uneasy about the latest escalation of tensions. We are seeing demand for safe havens such as gold, yen, and the Swiss franc being boosted since late yesterday. Looking at the dollar, we can see dollar yen is down back below the 112 level following that fresh spike in tensions between the US and North Korea. The dollar index, though, has continued to rise over the past 2 days, hitting a 3-week high, and that's mainly due to weakness in the euro and the pound, which make up a big chunk of the dollar index. In the meantime, we are seeing quite a bit of mixed messages from Fed policymakers. Yesterday's New York Fed President William Dudley said that temporary factors depressing inflation are fading, and that he expects the Fed to continue to raise interest rates gradually. We saw less hawkish language from the Chicago Fed President Charles Evans and Minneapolis Fed President Neil Kashkari. Evans said that although he is nervous about inflation, he does remain open-minded about the third rate hike. And so he's sort of in between Dudley and Kashkari, whereas Kashkari was the most dovish, as expected, saying that he doesn't see any signs of inflation taking off. And later today, we're going to have Fed Chair Janet Yellen giving a speech at 16:45 GMT, where she may potentially signal a third rate hike this year, or at least give a more confident expectation about the possibility of a third rate hike, given that at the moment we are still seeing some split views within FOMC members. Moving on to the euro hasn't been doing too well since yesterday. We can see it's been drifting lower since Friday. Of course, that comes after the German elections, where Angela Merkel's party had its worst performance since 1949 and will have to form a coalition with 2 other smaller parties, and that may weaken her position both in Germany and possibly within the EU as well, as the other parties might oppose further EU integration. So that is weighing on the single currency, currently trading at near 4-week lows at 1.1828. That's the low it hit a short moment ago. And also weighing on the euro, we had fairly dovish remarks by ECB President Mario Draghi. He was speaking before the European Parliament yesterday, and he maintained that the Eurozone still requires substantial monetary policy accommodation, and that the economic recovery needs to translate more convincingly into stronger inflation dynamics. And he also voiced some concerns about the stronger euro, saying that the recent volatility in the exchange rate represents a source of uncertainty which requires monetary solo. All of that has been quite negative on the euro. Moving on to the Australian and New Zealand dollars, the risk aversion in the markets this morning has pulled both currencies lower, and that's because both government bonds for both countries are seen as safe havens. So when bond rises, when demand for bonds rises, that pulls the yields lower and also weighs on the currencies negatively. DOZ is also been hit by a big slump in iron ore prices, so we are seeing the Aussie currently trading near last week's 3-week lows. At the moment it's around 0.2930 against the US dollar. The Kiwi, of course, in addition to today's risk off, was hit yesterday by the inconclusive election results from Saturday's general election in New Zealand, where the ruling National Party failed to win a majority. So we are now seeing attempts to form a coalition with the third largest party, the New Zealand First, who may either choose the National Party or the Labour Party to form a government, and that could take 2 or 3 weeks until they come to a decision. The Kiwi has led to 1.5-week low of 0.7221 on that political uncertainty. And moving on to commodities, in oil prices, we can see both WTI and Brent crude have risen very sharply over the past day. The outlook for the oil market has been improving and had been improving for some time now, and was given an added boost on Friday following that OPEC non-OPEC meeting, plus further supporting prices late yesterday was Turkey's threat to cut off supply from the Iraqi Kurdistan region, where a pipeline flows between the two countries. This is because Kurdish Iraqi Kurds have decided to hold an independence referendum, which Turkey opposes. So the threat of a supply cut there has lifted oil prices. WTI hit a 5-month high of $52.43 a barrel early today, whereas Brent crude has been rising in more sharply because, of course, Brent crude wasn't hit by the hurricanes in the US, which affected the US prices, WTI prices. Brent crude is trading at a more than 2-year high of around 59.50. It hit 59.49, though it has slipped back below the 59 level at the European Open. Looking at today's economic calendar, we had New Zealand trade data where we saw a big increase in the country's trade balance in August. German import prices rose slightly, were actually flat month on month in August, falling below expectations of 0.1% increase. It's going to be fairly quiet in the US session. We're just going to have the Case-Shiller house price index, new home sales. So I guess the bigger focus will be the consumer confidence index, and of course Fed Chair Janet Yellen's speech at 16:45 GMT, where she'll be talking about inflation, uncertainty, and monetary policy in Cleveland. That's it from me. Thank you very much for watching, and have a great day.